The bullish abandoned baby is a pattern that appears at the end of a downtrend and signals reversal to an uptrend. Simply put, it signals an end of the selling pressure of the bears and return of the bulls in the market. This pattern consists of 3 candlesticks. The first candle has a black, or red, big body, the second is a small and bearish candle, or a doji, and the third is white, or green, candle. A doji candlestick is a candlestick that has the same opening and closing price, and symbolizes indecision between sellers and buyers. While there are multiple ways to trade the bullish abandoned baby pattern, here are some general ideas on how to do it. Entry: some traders enter on a break above the third bar in the pattern using a stop limit order. The expectation is that the price will continue to move higher, so if it does, by moving above the high of the third bar, this could be used as a buying opportunity. Stop loss order: to avoid getting stopped out prematurely, traders could place a stop loss order below the lower shadow of the bullish abandoned baby bar, doji. Traders who would like to risk less could place a stop loss order just below the low of the third bar in the pattern. Increased volatility often accompanies trend reversals. Keep this in mind when selecting a stop loss location.